All right, welcome back to the program. Joining me right now is Uchenna Minnis, who is the managing partner at WST Markets. Hello, Uchenna. Welcome to the program. Happy Monday. I can't hear you.
Hi, Nancy. Thank you for having me.
Hi, Uchenna. Okay, let's get started. Please characterize the July markets so far. For me, we've seen, at least this is the third week of July, we've seen 2 weeks of downsides, 1 week of upside. The first week of July, we recorded an appreciation of 1.47%. I'm talking about the stock market. And now, last week, 0.12% downside. When I did my little arithmetic for the past 3 weeks, the market has gained about 0.69%. So characterize for me how July has been around this data that I've just told you about.
Yeah. Nancy, I think basically, if you look at that trajectory of our market really since the beginning of the year, even up until now, you can see that we have actually been in a bullish phase. Really, they've been just a general optimistic view from market participants and investors at large concerning what the economy is looking to, the direction the economy is looking to move into. But very, very much importantly, what has really given us a bolstering effect is the fact that we've had oil trade at a very, very bullish place for the major part of the year right now. So that in itself is giving that outlook. And if you understand from a foreign portfolio investor vantage point, that is really what they look at first as a primary index before they start checking out our own inherent macroeconomic, should I say, variable. So the fact that we've seen oil trade significantly higher for the major part of this year has given market participants and investors some very optimistic outlook as regards to our stock market, and that's basically what we're seeing, Nancy.
I like that you brought this discussion around oil, and let's take a look at the OPEC deal that was just struck, on Sunday. OPEC Plus, the truce, we've seen internal splits amongst the members of the cartel. But how do investors now, especially in the Nigerian capital market, play the oil marketing firms that are listed on the exchange?
Well, we basically what we've seen with OPEC and OPEC Plus, this agreement really, the alternative was going to be quite bad. I think it was clear that the UAE were already creating a faction within the bloc, saying that they've been to a point where they have been being sidelined really. About one third of their production has been kept on hold, given the fact that they needed to meet the production quota set by OPEC. Even Nigeria too has also complained that our production quotas has been capped too aggressively for us to generate the revenue target that we're looking to work with, given our own budget place. So there is that point where OPEC, the leaders of OPEC, Saudi Arabia and Russia, had to really succumb to this agreement, really, in terms of increasing production. And right now, oil prices is already in a very bullish place where even when it goes higher right now, we might be seeing a negative effect, a negative feedback, given that consuming nations are already complaining that high oil prices is not exactly positive for their outlook right now. So that's basically what we're saying. What that is doing, coming back into the country really, is given the fact that with this increase in production, we can see that spread across IOCs within country, and that in itself, investors can look into plugging as a positive outlook for those companies and try to get in on them. And right now that they are sort of relatively undervalued and underowned, given the possibility of what we'll get to see in terms of the near bullish momentum we're expecting in these stocks.
Okay, so you're expecting a bullish sentiments around the oil marketing firms listed on the exchange, isn't it? So is it a good time to position?
Yes.
Hello, Uchenna, are you still there?
Yeah, no, so I can hear you. Go ahead.
Okay. So do you expect investors to reposition themselves because of this OPEC Plus deal, or it should still be status quo?
No, I think right now, now, so when you look at this with investors or market participants, it is the idea that is being traded. It's not really the fact, really. So if you start to trade the fact or invest after the fact, you're already too late. So given the agreement really that we've seen that there will now be an increase in production, I think that would translate into a member country like ours, whereby IOCs are giving even more, should I say, leeway to continue to increase their production capacity. So that in itself is a bullish outlook, given where oil prices are currently trading. So on the basis of that, from a fundamental perspective, you expect these companies to see some significant growth in their own market internal. So yes, I think that might just be a point where investors might join in to get into these stocks.
Okay, let's come back to the stock market a bit and try to talk about a bit of the technicals there. If you take a look at the financial services sector, we're looking at the bride. The bride continues to be the financial services sector, especially what's happening around Guarantee Trust Holdco, Zenith Bank, UBA. We've seen these stock markets, dominate at least this July. What actually is driving this? Because even when I took a look at the banking index too, the banking index outperformed inflation rates.
Right, Nancy. When you are coming from a place where we've dealt with some sort of unprecedented risk like the pandemic and whatnot, but investors try to search for stability in terms of companies that will jump onto. And given the fact that the banking sector is highly, highly regulated, and at that point are seen as essential services, investors take that is a no-brainer going to understand that, well, when you go in with your portfolio, you reallocate your portfolio into the spaces, given the fact that there's some level of safety given on their regulation by the Central Bank of Nigeria, and that's just it. You are seeing some sort of safety drive into the sector and this banking companies, Nancy.
Now, the other question will be, how should an investor position himself or herself around the rise in COVID-19 cases, COVID-19 infection rates, even in Nigeria? Taking a look at the data, we have 2 vaccinated people per 100 people in Nigeria. I don't know if you have been vaccinated. So out of 100 people, we have 2 per 100. I have been vaccinated. I've taken my 2 jabs, so I'm among the 2 per 100 people. So how should investors position themselves around the surging cases of COVID? Do you think it's a risk for us?
It's a risk for everyone, Nancy. You could see what is happening in the global market right now. Investors are already looking to just tilt away from risky assets, really, because nobody wants to be caught unexpected the way we were caught last year, And if we're getting to a point whereby, even with vaccination, we are saying that there's some Delta variant that might be more violent than the previous strains, then we might be looking at another significant risk precipitating in the market. So as from an investor's perspective, it is to apply caution, try to play around very defensive stocks, really. To just right now it's more like safety rather than looking to chase for yield. And I think that's what we are getting to see, really, because if we get to a point whereby we are looking to face another maybe stage of lockdown or whatnot, that is going to get to hit the market significantly. So from an investor perspective, I think it's just wise at the moment and to be cautious as to how you allocate your portfolio, really. So defensive stocks, safe haven stock assets should be your main focus at the moment until we have a really clear idea of what we are dealing with when it comes to this pandemic, Nancy.
You talk about defensive stocks. I'm curious to know what defensive sectors or stocks that investors or I should also hide in to wait out the reality of COVID-19 infections as well as inflation. Though we're seeing a moderation in inflation rate, what defensive stocks and what defensive sectors should I go to hide, or should I hide under to wait out this period?
Yeah, we already have a discussion. You saw with the financial sectors really, given the context. Yeah, those are defensive given the fact that they will always be operational. They will also always be considered as essential services. So that is just going to be the case. You also go to places your the fixed income market really, given the fact that these are government-backed securities. So whether except we are having a failed government really, but that's a stretch. So in a way, given this context, that is you can regard to that as a defensive asset for you to reallocate your portfolio to. So you have all of these places. Even you can go to precious metals. Gold. You can get yourself some gold. Irrespective, they have their inherent value. No matter what we're looking to face, gold has is that store of value really. So it's just for you
For
to
investors,
understand that you
sorry,
have to now
Uche,
have to
let me interrupt
focus
you
on
here.
those safe haven assets and defensive assets for you to not chase yield on that front.
Sorry,
Nnaji.
Uchenna, let me come in here as a result of what you said, that gold is a nice place to hide right now, a gold investment. For those that are watching and they want to be part of, how should I take advantage of gold assets right now? How?
Well, Nancy, you could literally the very basic way. I know it's quite difficult for us to have access to gold bars here, but you could actually just get gold in any form of ornaments that you would get with them
Okay.
dealers. Things like that, things that you would normally want to wear for aesthetic purposes. Those are assets, really. Those are really assets because when you realize that those were actually made from the smelting of this precious metal, then you understand that what you're holding or what you've acquired is an asset for you. So you can decide to wear it, you can decide to keep them. But what that is that you've had some a precious metal that is really a physical object that hold values for you, or it has as a storage of value for you, Nancy.
What kind of signal do you expect from the CBN's MPC meeting in the forthcoming week? Because we're seeing a moderation in inflation, 17.75% as of June, though the market is bearish. But is there a kind of signal that the market may be expecting from the Apex Bank that may recalibrate the market, or perhaps for investors to reprice their assets? Or perhaps they still continue to watch?
No, yeah, I think right now, Nancy, it's the smart thing for you for FS banks and most of the central banks really is to be cautious and just watch really, because the fact is you don't want to blow out or go out on all of the cylinders. You don't exactly know what you're looking to get in another 1 month or 2 months. So for you as an FS bank that needs to um, 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 put into account all of the necessary macroeconomic variables from a monetary policy standpoint, it's very important for you to apply caution. So we are at the point whereby things are really in a current status quo. It's just stable enough. You don't want to go ahead and start easing your accommodative policies right now, because we could get to a point whereby the virus hits you significantly, and you've all just used your tools in terms of holding this the economy together. So I think from a very cautious perspective, I expect the MPC to hold rate and continue to maintain their current monetary policy stance to see what the coming quarters would hold or provide.
Okay. I will focus on inflation moderation, marginal economic recovery. Uh, you've talked about investors going into defensive sectors for real returns, perhaps to beat the devils that we are fighting against now. What's your prediction for the remaining, for the 3 trading days of this week and the remaining 8 days, specifically of July? What's your prediction? What will be the market behavior?
I don't really expect any very aggressive move in the market given this week. It's free trading we saw at this point investors like to be cautious, given that there's a shorter time for them to assess the market really. And I think July has been sort of moderated, if I could use that term. in terms of the outlook of the market really. So I expect a bit of moderation going, a neutral stance really going into the end of July. And I think I expect August to sort of give us an idea of what we are looking in the coming quarters really and towards the end of the year really, Nancy.
Thank you very much, Uchenna, for joining us today. Have a great week and
Thank you, Nancy.
happy
Thank you for having me.
holiday tomorrow, Wednesday, too. Thank you. All right, I've been speaking with Uchenna Minnis, the managing partner at WST Markets. Let's quickly take a break to bring in Paul Alaje, who is the lead economist at SPM Professionals. We'll be breaking down the inflation numbers in case you don't understand what is happening, that you're still buying food stuff very expensive. And the country says inflation is trending downwards. We'll be explaining that when we return. Do stay.